So I think we have a lot to cover. We are still having a couple of participants join us, but I think we will go ahead and get started. So first of all, it's my pleasure to welcome you to today's webinar. We appreciate you joining us today. We're going to be taking a look at some of the new legislated monies that are coming in to support businesses during the time of this pandemic. And we're going to be hearing from David Reiling with Sunrise Banks about some of the details of what that might look like. My name is Sherry Gangler. I'm with the Minneapolis Regional Chamber. Excited to help host this webinar today. As I mentioned earlier, if you're just joining us, we do have a chat feature on our webinar that will allow you to ask questions, particularly related to technical issues. If you have any questions about audio, we will certainly help to triage that for you. We will also be answering your questions using the question and answer feature. So feel free to ask questions in that feature, and after the presentation, we will answer those questions for you or work to get to as many of those questions as you can. We will be recording this webinar, and so we will be making this recording available to you after the fact. If you look on your screen, this shows you where you can find the chat features and the question and answer features on your screen. A little bit of a delay here. We do have additional resources on the Minneapolis Chamber's website. Those can be found at www.toolocaltofail.com, as well as the Minneapolis Regional Chamber website, minneapolischamber.com, and we will also post those in the chat links to be available for you after the event. So now I'm going to turn it over to Jonathan Weinhagen, President and CEO of Minneapolis Regional Chamber, to start the presentation.
Great, thank you, Sherry. I am Jonathan Weinhagen, President and CEO of the Minneapolis Regional Chamber. We are certainly navigating unprecedented and uncertain times. So I wanted to start not only by thanking all of you for joining us today, but also taking a moment to thank you for all that you do for our region and our state. You are our job creators, the leaders who take risks, who innovate and invest. You really are the backbone of our economy. I want you to know that we appreciate you, and I think that's something that isn't being said often enough as we manage through this time of crisis. We want to make sure that you are as well positioned as possible to continue to prosper when we get on the other end of this thing. It's why we launched the Too Local to Fail Coalition, a platform to advocate, educate, and share your stories, the stories of local businesses that are the heart and soul of our communities. We want Minnesota's businesses to be prepared to take advantage for every possible resource that's being made available through the federal government, the state, and our local communities. We're hoping that today's session will provide an opportunity to better understand the Paycheck Protection Program that will be available as soon as tomorrow, $350 billion pool of resources. It is a lot of money, but it is not a lot of money. So we want to make sure that Minnesota's businesses get their fair share of that relief, and maybe even disproportionately get access to those relief dollars. Certainly appreciate the partnership with Sunrise Banks. They're hosting us today and providing some great thought leadership. They're also just a longtime partner and community partner to many of us. So we're grateful for that leadership and the quick turnaround to be able to bring this content to you today. So with that, I would like to introduce David Reiling. He is the CEO of Sunrise Banks. And he's pulled together some great information. This is all being baked in real time, so I'm grateful for kind of the real-time nature of your efforts here. Over to you, David.
Jonathan, thank you very much, and good afternoon, Chamber members. We've got a lot of information to cover in such a short period of time, and we want to be able to get to your questions as well. And so I think what's beneficial at this time is to jump right into the slide deck. And of course, as we're bringing that up, I hope everyone is safe and healthy out there and practicing your social distancing to bend the curve. I'm just going to ask, there we go, as we're trying to load the screen there. Perfect. And my assistant Hannah is driving today, so not via car, but driving the slide deck. And so, Hannah, if I could just have you advance the slide and we'll go right into the first one. All right, so what we're talking about today, and again, just to jump right in, so I think it's this program that we're going to talk about is of significant value not only to you as a small business, but to the state of Minnesota. And so I think the important thing of what we have to do is kind of get past the big picture and down into how it really impacts you. And so, but let's start just kind of high level. So Congress passed the CARE Act, which was a $2 trillion relief act given the COVID-19 pandemic crisis. And so there are a couple buckets, if you will, of money. And so just as an overview, individuals got quite a bit of that money. And if the bubbles kind of show it here, they show about 560 billion. It's kind of about, depending on how you do the math, 600 billion. The majority of that, 300 billion of that, is going to go in cash payouts into checks and directly to consumers. There's about another 260 billion in extra unemployment, and then about 44 billion that's going to go to student loan relief. When we think about large corporations, there's about 500 billion there in total. They're about 25% of this pie. 425 billion is going to go to some type of relief to targeted industries. 58 billion will go to really the airline industry, wages, contractors, national security. There's a few things in that bubble. The one that we're really looking at today is going to be the small business bubble. That is about 377 billion. The majority of that, as Jonathan had mentioned, is about 350 billion to the Small Business Administration for the Paycheck Protection Program. There's about another 17 million of that that's going to go to existing SBA borrowers in terms of debt relief in the form of 6 months of what they call deferment, which is essentially making payments on behalf of those borrowers. So if you have an SBA loan currently, that is something you're going to want to take a look at. State and local government is next with about 340 billion. This is for direct COVID-19 response, higher education, K-12, family programs, block grants, things of that nature. And lastly, there's kind of a mixture here of public health, public benefits, and that's mainly hospitals. And so that public health in total is about 150 to 170 billion on how you slice it. So anything from equipment, veterans care, SNAP programs, pharmaceuticals, etc. So I hate to say this, but creating the $2 trillion relief bill and getting it approved and signed by the president is the easy part. To get $2 trillion out into the marketplace and effective to the place it needs to go is more challenging. You know, I would have to just pause and say that, you know, we may take a few critical swings at our elected officials, but we have worked closely with our elected officials from Minnesota, and I have to tell you, they're working really hard. We're engaged with their staffs regularly, and they're doing a good job. So I think all in all, they're really looking out for the citizens of Minnesota and America for that matter, trying to get this money out the door. So let's advance the slide and kind of dive into the small business. So talked a little bit about this. And the piece that we really want to focus on is this forgivable loan piece, the PPP, or the Paycheck Protection Program. This one is really going to be focused in on small businesses that a maximum loan amount of up to $10 million, employees of less than 500. So that's kind of the general parameters for this particular program. And the intent of Congress in this case is to get this $350 billion out of Treasury, if you will, distributed through banks and credit unions, those who do SBA lending, and into the hands of small businesses for basically three primary purposes. But one significant focus is for payroll. They want to get this money out to small businesses so they can make payroll pay their employees, pay their health benefits, really for an 8-week period in order to get them and get our economy over the hump of COVID-19. And so in addition to that, this money can also be used for mortgage or rent payments, as well as utilities. So think gas, water, electric, cable, internet. But the main thing is to get this money filtered through into the hands of small businesses, give them some relief to make it for 8 weeks in this forgivable loan piece. And hopefully, as we get past the curve or lessen the curve or beyond, and we start to get back to hopefully life is a little bit more normal, that will help us get through. I also mentioned that relief for existing loans or SBA borrowers, that's $17 billion to cover 6 months worth of payments for those small businesses. In regards to the emergency grant program, there are some grants available. There's $10 billion to cover immediate operating costs. I have not seen the detail on how to access that program yet. And so others may have more information in regards to that, but for the focus of the day, we're focusing on the Payroll Protection Program and $350 billion that is slated for small businesses. Let's advance. So we touched on a little bit of this, but here's some program overview and outline. And I have to put a little asterisk next to everything we talk about today, because the rules are still being written. Yesterday afternoon, we got a new clarity on some of the rules, and they have changed. And we know that Treasury and SBA are still negotiating as we speak on some very key items. And so let's just start from the top. So if you are a small business, a nonprofit, a tribal business, Veterans Association, have less than 500 employees, and have been negatively affected by the pandemic, which is fairly easy, I would assume, you can be eligible for these funds. Now, I do want to clarify a few things out of this definition. Small business, fairly easy to understand, S Corp, C Corp, LLC. Nonprofit organizations, want you to listen to this. You are eligible for this program. Typically, SBA is not eligible for not-for-profits, but in this case, it is. And it is something definitely to look into. I would encourage you to participate. Now, things that have changed in the last 24 hours. We were under the impression that 4% was going to be the maximum loan amount on this. Yesterday, we learned coming out of the SBA that the interest rate on this loan as of right now is 0.5%. So it's not free, but it's pretty close in terms of that. It's the lowest rate I've ever seen on an SBA program. And it can offer up to 6 months of deferral payments if a borrower requests it. And that would be up to the individual business. Loan recipients may be eligible for loan forgiveness. I'm going to go into detail on that and give you just a high-level example. And the business must be operational as of February 15th of 2020, so as of a couple months ago. And they've had to have paid salaries and payroll taxes and paid independent contractors. Now, I do want to put an asterisk next to independent contractors because the legislation hasn't been, and the rules haven't been clear as to whether they can be included in the calculation of a business's payroll or if they have to file for the Payroll Protection Program separately. I would love to say it's all lumped in, but I don't have good clarity. We're still looking for an answer for that. So it does point out one other thing, that self-employed individuals are also eligible for this program. So if you're an independent contractor, if you're a self-employed individual, you can apply to the PPP program. As I mentioned, loan amounts can go up to $10 million in total, 2 full-year payouts. So the term of this loan, as far as we understand it today, is a 2-year term, and again, with the possible of 6 months worth of deferment, as well as a forgivable piece. Important to note, it is an unsecured loan, and it does not require any personal guarantees. So no collateral on this, and no personal guarantee. Next slide, please. So let's give you the outline of the formula, and then we'll try to give you an example. So basically the formula to determine the loan amount for the Payroll Protection Program is you're going to take your historical 12 months worth of payroll expenses divided by 12 to get a monthly average. So it's your historical 12-month average of your payroll cost, and then multiplied by 2.5 times. There's nothing magical about 2.5. That's just the number of the multiple that Congress has determined of what they will do. And so payroll expenses, including salary, commission, bonus or severance, health insurance, state and local payroll taxes. One thing to note here that we're pretty confident, even though it's not extremely clear in the guidance, is federal payroll taxes. Those are excluded from the calculation. So state and local payroll taxes included, federal excluded. Let's go to the next slide because I believe this is the, so let's just do a quick example for you. So let's just say a small business has an annual payroll of $1.2 million. And so their average monthly payroll is $100,000. You multiply that by 2.5 times, you come up with a loan amount of $250,000. Now, one thing to note, which I put in here, which is probably, it's in this calculation of the monthly average payroll. If you have employees that earn in excess of $100,000 in salary, you can count them, but only up to a 100,000. You have to exclude anything over that in that monthly average calculation. So if we come up to that $100,000 monthly average multiplied by 2.5 times, you are going to get a loan amount of $250,000. Now I want to advance the next slide. But what I think I'm going to do, Hannah, if you can, let's go back one slide. I think I want to finish this example. I think we're going to touch on it again, but I think it's something you should hear at least once or twice to understand. In this example, what we've determined is the loan amount for this particular program at $250,000. Now, if this particular business maintains its employees and continues to have $100,000 worth of monthly average employee expense, payroll expense, in 2 months they would have burned through 200,000 of the 250. And let's just say for purposes that between the rent and their mortgage and their utilities, they use up the additional $50,000 worth of it. In that particular case, and they used all that money up in 2 months, in 8 weeks from the date of origination or the loan being funded. In that particular case, as we understand it, and the business will have to provide evidence of this, that they actually paid the $250 for these eligible expenses. The bank will determine then, once we receive the documentation and that the business has done this, that $250,000 loan and any interest that it accrued would be forgiven. So this is really the play in this program and why I'm really encouraging everyone that owns a small business, a nonprofit, tribal organization, etc., that qualifies to take a look at this. Again, the intent of the legislation is to get money in the hands of small businesses so they can make payroll, pay those employees, keep them on their health insurance, pay the rent, pay the mortgage, keep the utilities and the lights on. This is the intent of this. And so this money that comes in, if applied to those within the 8-week program, has the potential to be 100% forgiven. So I don't know why you wouldn't take advantage of a program like that. Now let's just go through a quick example of a scenario just like this, but let's say the small business in that 8-week period after funding only spends $225,000 on those eligible activities. And let's say they spend the extra 25 on facade improvements or some other type of business expense, pay their vendors, let's say. In that particular case, that $25,000 is owed back to the bank and ultimately back to Treasury, if you will. But they will have a period of time, in some cases up to 2 years, in which to pay that back. So the idea here is take advantage of as much as you can of the forgivable piece. If you need additional working capital, it still is quite advantageous to do that. I would say if you're even considering the program, just apply for the 225 and go for the forgivable amount of what you feel confident that you will expend on those eligible expenses as a business, particularly that payroll and salary. If we can, let's go on to the next slide. So again, who can apply? All businesses, including nonprofits, veterans, tribal. We've gone through all this. 500 or fewer employees can apply. You know what, I know this question will come up. It is, I already have an SBA loan. Can I apply for the payroll protection program? And the answer is absolutely yes. The only caveat there is the combined loan amounts still need to be under that $10 million loan amount. So you can apply for both if you have a current SBA loan in place. So now there may be some restrictions. We don't know the absolute answer to this. There may be industries that are prohibited, that would have been prohibited already under the SBA guidelines. We're looking for clarification from federal guidance in regards to that. Let's go to the next slide. So as of this Friday, tomorrow, and again, I would love to say that this is hard in stone, and I know the Secretary of the Treasury, Mnuchin, came out and said we will have a program up on April 3rd, and I'm hoping that they will. We're hoping that it's going to go live tomorrow. They're still working out rules and some pretty important ones, and so hopefully this April 3rd date still holds true. But April 3rd, this program opens up for sole proprietors and small businesses. A week from from this Friday, April 10th, it opens up for independent contractors and self-employed individuals. So I would encourage you to inquire early. We have seen, even as a bank our size, while we're very active in SBA, we have tremendous, almost overwhelming response from small businesses across the country who want to take advantage of this program, and for good reason. Now, as Jonathan had mentioned, we really would love to see Minnesota not only get their fair share, but get more than that and take advantage of this program. Keep your employees working, keep our economy going, pay those mortgage rents, pay those utilities, and let's make it through this pandemic. Let's go to the next slide. Now, how to apply. So at the moment, the program is going to be available when it goes live, hopefully tomorrow, through an existing SBA lender, preferred lender, if you will. And a preferred lender is nothing more than someone who has been designated by the SBA in order to underwrite on their behalf. Sunrise Banks is an SBA preferred lender. There are many in the state of Minnesota, which is good. We want distribution of this program to be as wide as possible for our state. Any federally insured depository participating in the program can do this, farm credit institutions as well. So that there are many providers, and I believe at sba.gov you can see the by state who are the preferred lenders in the state of Minnesota. Let's go on to the next. Couple things specific about Sunrise if you're not familiar with Sunrise Banks. So we are headquartered in St. Paul, Minnesota. We have been an SBA preferred lender for close to 2 decades now. We're what's known, we have a certification as a B corporation. And so our focus is really on the care in the community. And we do think it's a responsibility of ours to make our community aware of programs like this. We have never seen an SBA program like this. Now, these times are very rare. Obviously, it's kind of in a crisis mode. But again, we want our community to take advantage, whether you use Sunrise or another institution. That is the main focus of today, that this program is really worthwhile. If you're a business and you never thought that you would be applying for an SBA loan, you should apply for this loan. I've had many customers who normally would never consider an SBA loan because they don't have any collateral shortfall. They run they have access to the traditional financial market. In this case, they've laid off people. The idea here is to bring those people back and to get those employees working and paid. Next slide, please. Here are some resources. SBA.gov, sunrisebanks.com. We have a dedicated page. You can sign up for alerts and emails and information on that. The Minneapolis Chamber's website also has information. The U.S. Chamber of Commerce also has information. SBA.gov is a good resource as well. We're getting information from all these various different sources, and probably those who are participating in this program are getting kind of minute by minute information out of what's known as the National Association of Government Guaranteed Lenders. So think of it as the trade association for SBA preferred lenders. So we want you to go to credible sources for this information, but remember, some of this is in flux. So these rules have changed in the past 24 hours. They're likely to change by this afternoon. So this webinar may be outdated in a few hours as we get more information. But we're going to try to keep our sites as current as possible so you have the most best and accurate information that you can. I think at this point, if we advance the slide, we are going to go to questions.
Wonderful. This is Sherry again. And we have a whole host of questions, David, for you. We're going to start with some of the ones that we've seen multiple times, and then we will keep working as time allows to get through the other questions as well. So the first question that has been asked quite a bit is from new businesses. So what do you recommend if a business does not have 12 months of payroll history?
Yes, so there's going to be information coming out more specifically on new businesses. I would say the rules that we have currently are not specific in regards to a new business, although the legislation contemplates new business, so you are eligible. There is going to be, if you think about it, some of the information that you can put together. Again, my guess is a new business is going to find its way. There'll be more FAQs that come out specific to new businesses. But think of things in terms of what it is you can do now as we're waiting for those answers. So if you had payroll for whatever month of time that you had, what's your source for calculating or getting that information? Do you have your mortgage statement or rent amount? Do you have utility bills from your various gas, water, cable, electric, internet? Start putting those together. Your articles of incorporation or association, whatever they may be, membership. These are just some basics that you can do to start gathering this information together that are likely to be required. If you filed a tax return with the new business, that would be another good kind of indication that may be required in this process for not only new businesses, but for existing businesses. So part of this is take the time before, as we're waiting for some of the new business rules to come out, to get this information together and be ready. And we'll be posting things regularly on our website in order to keep people up to date on all on some of the intricacies between, let's say, a nonprofit organization, somebody who's self-employed, your typical small business, and tribal associations.
Very good. And kind of just as a clarifying piece, or to piggyback off of that question, for any business, is the 12 months of average payroll, is that from the date of application?
It's a great question. We originally thought, in our knowledge as of today, or what we've seen, is that 12 months of payroll is February 15th going back. So February 15th of 19 through February 15th of 2020. Now, that has not been specified in the rules we got yesterday. So think about it in those terms, that's the period. It may adjust.
Okay, very good. Technical, but an important question is how early can the applications be submitted on April 3rd? If you're ready at 12:01 a.m., will it be good to go?
So the answer to that question is, I don't know. We are waiting for final rules, and we are waiting. The SBA has to open up their system. So banks like ours are working through a system that's called E-Tran, not to get too technical on you, but the SBA needs to be ready to receive the applications on the other side. And so we do actually have quite a number of small businesses who are ready to roll, and that's fantastic. And I would tell you this, in maybe other banks, I think we're all in the same boat because we're all waiting for the same rules. We all have to wait for the SBA to open up. My assumption is the flood that's going to go in there has the potential to have some disruption in it. I just think it's going to be a bit challenging out of the gate. I think of what you see out of SBA lenders, as of tomorrow and over this weekend is dramatically going to change by the following weekend, in terms of the processes, as well as the automation that we'll be putting into place, as well as the capacity on the SBA side in which to handle it. I think we're going to learn a lot in this first week. I don't expect it to go perfect. I expect it to be bumpy, but we'll keep you posted as quickly as we can through our websites as to what the status of it is. But if you're ready to go, that's great. We're ready to go too. We just need some rules, and we need the doors to open and get going. So we're with you 100%.
Very good, very good. And then, so is this something that a business owner would need to come into, or is it into your branch, or is it all done online?
That's a fantastic question. If there was not enough hurdles to this whole thing, we're going to do it all online.
Okay.
We're going to practice social distancing. We're going to have people submit. We're going to have a process in which for you to submit secure documents securely to the bank, and we'll upload those. We're going to try to get those into formats that are easily understood, and we're trying to reach out to payroll companies at the moment so they can start producing reports that are standardized. If someone's on like an ADP or Paychex or Gusto or someone like that, that they can produce those reports on behalf of small businesses to make the calculations easier and the documentation easier.
Very good. How soon is the turnaround, or how soon will people be notified if they're receiving funds?
It's a great question. To start with, I think we would think about that in terms of, we're going to take some applications, we're going to put them into the pipeline. We're going to see what the turnaround time is of SBA and how efficient and how automated they are on their side. We think as we get ramped up, and again, we think that's about a week or so's time for automation. We're hoping that we'll get through our processes within about a 24-hour period and submitted to the SBA. That's the part that I don't have control over. I don't know what the turnaround time and approval from the SBA will be back to the bank in which to fund the loan. So we have a little bit of a gap or black hole in that particular case. My guess is Treasury and SBA is going to throw everything they have at this to get this turnaround time. And so hopefully it is very efficient and we can get as much throughput as possible. If it helps anybody out there who's in the manufacturing, I use a manufacturing analogy with my staff these days, and that is, we need to lean our operation. We need to get as many of these through as possible. How many shifts can we work per day? How quick is the SBA getting back to us? What's our quality control checks? We will do everything we can. We've pivoted the entire company to jump on this and to ramp it up, so our Minnesotan businesses can get access to this money.
Very good, very good. A little clarification on the $100,000 limit on payroll. Does that include, per person, does that include medical insurance and retirements, or is it strictly payroll expense?
So I believe it includes all of those benefits.
Okay.
And to my knowledge, life insurance is also included in that. I haven't seen that not included, and I've got that question a few times. So yes, that 100,000 also includes, it's kind of that all-in number, if you will.
Very good. I just feel I'm just peppering you with all these questions, David. We just have
Keep
so
rolling.
many.
No, it's great.
You are doing a fantastic job. So we've had some questions also on how do we account for part-time and tipped employees in the formula and eligibility?
Yeah, so commissions as well as tips are included in the payroll calculation.
Perfect. Let's see.
Again, just for clarification on that, it's the 1099 employees, those independent contractors, that one set of regs included them and the other was very vague. And so we're just a little unknown as to whether a 1099 has to file their own, that contractor has to file their own application to the SBA, or whether they can be included in the company that they're technically working for.
Very good. We're also looking for a little clarity on the division of how the funds can be used. So again, is it 75% payroll and rent and 25 other expenses? What
Yes,
is
great question.
yeah.
I totally have the same, it's the same question. So the guidance came out yesterday, of the rules that said SBA anticipates that, I think that was the word they used, that 75% or more would be used towards payroll. And I'm like, well, what does that mean? Tell us 75 or not. So our assumption is that we're going to get clarity on that, that I would have you get in a mental state that says 75% of the eligible expense is towards payroll. And again, I think that was the intent of the legislation, was really to keep people working and keep them have a wage and benefits if they have that, so they can eat and pay their rent. That 75% is a little loose at the moment. I don't know if that's a hard number via SBA. Since it was published in that, I think we should think in those terms, that 75% of the eligible use should be to payroll.
Okay, very good. Again, some questions about sole proprietorship. And actually, first off, so as an owner, if a person doesn't pay themselves in payroll, they take dividends, do they include their own income?
That's a great question. And I've been trying to get an answer to that. And we'll put this on our site as soon as we hear back from the SBA, whether a distribution to that sole proprietor can be included in the compensation or in the payroll calculation. I do not know that answer to date. I really wish I did. I've been asked it probably 30 times in the past 2 days.
Excellent. Okay, let me see. And just for everyone listening, just know we're sorting through. Perhaps you can see we have almost close to 100 questions. And so really trying to look for perhaps maybe what is a new or different angle, another question that we haven't gotten to the topic of yet. So if you'll kind of be patient and give us just a minute. We have a question about applying for multiple SBA loans at one time. Can it be done? Could this have an impact on our current SBA loans?
Yes, so let's try to bifurcate that question a little bit. Let's just talk about the kind of the relief SBA loans, and then we'll go back into the standard ones. So the SBA has a particular program that is they're EIDL, it's a disaster relief loan that you apply directly to the SBA. And it is my understanding that you can apply for that loan after March 30th, a couple of days ago. You can't apply for both that loan and the payroll protection program. If you have one of those loans and you got it before March 30th, you can apply. So if you applied to the disaster relief directly with the SBA before March 30th, you can apply to now the payroll protection program and have both. Since we have gone past that March 30th date, now going forward, you can only apply to the payroll protection program. For people who have an existing SBA loan, you can apply, you can keep that SBA loan intact, then you can apply for either the EIDL, the disaster relief one directly with the SBA, or the payroll protection program, either or.
Okay, so there's a lot to understand with this. Let's see here. Is there a penalty for not spending down the funds?
So there's not necessarily a penalty, and I would say this: you can prepay this loan anytime without any prepayment penalties. There are no origination fees to the borrower or the small business in this case. And just to be clear, because we want to make sure that there aren't any fraudsters out there, lenders are not eligible to charge the borrower any fees. And so if you get contacted by someone and say, oh, I can put together your payroll protection program you know, for $1,000 or $100,000 or whatever, I wouldn't, you know, hang up the phone because it's not allowed. So banks are being compensated directly through the Treasury and SBA. This program is offered at really no cost to the borrower. It's unsecured and unguaranteed. Say that question one more time, because I think I went off on a tangent there. Is there anything regards to cost? So no, okay. So if you don't spend all the money that you got as the loan, you can just pay it back, I think is the answer to that question. Or you can make payments over time.
Okay.
The only thing is that if you don't spend it on an eligible activity in that 8 months, you will have to pay it back one way or another.
And they do not need to have filed their 2019 taxes before applying, or do they need to have their 2019 taxes filed?
My understanding is you do not have to file your 2019 taxes. As you may know, that date has been extended out to July 15th. Now, if you have them done, that's great. There's likely to be some type of documentation, or the tax return is probably, or a copy of it is probably going to come to place somewhere in this. One of the things that banks need to do in this particular case is identify the borrower. They have to really know their customer in a way and make sure that they're a viable business. And in a lot of cases, having a tax return is one way to evidence that.
Okay. And so they can, let's see, sorry, I'm just trying to find one last question, because we are getting really close to our time, but want to kind of get to as many of all of our participants' questions as we can. Last question, and then I'm going to throw it back over to my colleague, Christine Levins. Can accounting fees, payroll tax, property taxes be considered expenses?
From my understanding, I do not believe so. I think the main issue in regards to kind of your rent for your location is going to be mortgage interest, and it is going to be rent.
Okay.
And again, it started off, the regulation started off as both principal and interest on a mortgage. What I read just recently is just interest. So there's a clarification that has to be adjudicated there as well.
Okay. David, thank you so much for providing all of this great information. Christine, there she is.
Hi. Well, David, again, I echo Sherry. Thank you so much. And Sherry, good job navigating what it looks like 109 questions from 297 webinar attendees. So thank you all for your interest. I hope we answered as many questions as we can, but to David's point earlier, this is a constantly evolving situation, and we'll do our very best with our partners to make sure we're sharing as much information as we can. Someone asked about the link in the PowerPoint. It does go to a sample application. I believe that the true applications for this funding can be found on the SBA website, if that's correct, David?
Yes, you'll start to see applications come out on different various bank sites once we have the final one. We got a sample of one today. There are some sections that I'm hoping that they change in there. So I hopefully it's still the sausage is being made. But there is a sample that's being floated out there. And again, it's a template to look at. I wouldn't hold it as it's the ultimate truth, but it's probably pretty close.
That's great. Thank you. Again, I think we all need to be patient and see how we can best get prepared for this opportunity. On the, I believe the website Too Local to Fail was referenced earlier in Jonathan's remarks. You'll find on that site there is a one-page document that gives some general advice on how to get prepared in terms of gathering your documentation. So I encourage you to take a look there. There's also information about unemployment insurance and that sort of thing. So I think with that, yes.
Could I make one last comment? Because I think
Please.
this, from a chamber's viewpoint, might be important, and that is, the interest around this is tremendous at the moment, and it's growing. I think as this program and as this money moves through, and it sounds like a whole lot of money, right? 350 billion is an unbelievable amount of money. I do think it's going to go. And so I think at some point in time, there might be some discussion from small businesses. Does it make sense to extend it beyond the June 30 deadline? And does it make sense to provide more funding to small businesses? Again, nobody really knows how COVID-19 is really where we're gonna apex and come down, and what that recovery economically looks like. I just put that out there because I think I've seen such tremendous interest in this that I think the money is all going to be used, and it should be. We should get this in the hands of employees in payroll. But I think given that number, it may require more.
That's great to hear. And one of the things that we're doing, the Chamber and many of our partners through the Too Local to Fail campaign, is really advocating for those types of changes. So that's great to hear, because again, we don't know. For those of you that are attendees for the webinar, we also want to hear from you. We want to hear about the stories that you're experiencing as you navigate through these times. And there is a space for you to share that information with us on that site. So we'll encourage you to do that. Well, I would like to thank you, David, for doing this with us today. Again, Sherry for helping facilitate. And I think with that, we'll wrap it up. I think we have 2 slides that'll just give you a little more information. And as stated, we did record this webinar, and we will share that hopefully within the next day or 2. Thanks very much.
Thank you.
Thank you. And that is the additional resources to localtofail.com, minneapolischamber.com. And then there is a webinar tomorrow as well on the disaster loan information that David referenced to as well. And that information can be found on the Chamber's website. Thank you all so much. Thank you, Christine. Thank you, David, for presenting today. And with that, we will end this webinar.